What's up, Tim? Got it, got it. We early. I said you started early today, huh? Or you just a pop up? Oh, review. Okay, okay. Yeah, that's fine.
I'm at the I'm at the reschedule. I'm gonna reschedule it for Sunday.
Sunday. Okay,
Yeah,
bet.
Sunday evening. I'm gonna reschedule it for Sunday evening. I'm about to put something in the Discord right now to let everybody know. But I'm gonna reschedule it for Sunday evening at 8.
Okay.
I ain't gonna be able to do it tonight, but we gonna get it cracking. We're gonna get it cracking. I feel
Okay.
like today was pretty good. Today was pretty good. Um, but yeah, this the price action recap. I know I be doing a lot. I know I be doing a lot. My
You
guy
going? You
say
gonna
you.
do the other two, or we gonna do it in here?
It's both. I got it on the
Okay.
tube right now. Everybody listening to us, chop it up right now.
Oh,
I'm just
well,
sharing my
we gonna
screen.
style it.
I'm just doing every. I'm just getting myself together. I just jumped on. It's gonna be. It's on the tube. We on the tube, and yeah. Let me go ahead and. Matter of fact, while I'm thinking about it, let me go ahead and put this in the boot camp chat. That we gonna push it back to Sunday. Uh, and then we'll get started with the price action recap. What you think about what we was talking about this morning?
I enjoyed it, man. It was very insightful, man. Definitely, definitely.
That's what's up, man. That's what's up. That's what it's meant to do, man. I talked to my brother. My brother,
Hmm.
he was like, man, I I I I understand it. I understand it better now. I understand it better. Like, I was just like, that's just practice make perfect, man. When you be doing stuff over and over, the repetition just
Hmm.
make it click for you.
Yeah, I
Uh,
think once I can get you quit holding my hand, I can probably do it. Get comfortable doing it on my own. But when you walk us through it, we can definitely see it. But then when you do it on your own, it's kind of hard to hit that button.
I mean that's natural. That's not everybody
Hmm.
be like that. That's natural, and that's what I be trying to tell people. The only thing that's going to get you over that is just doing it. You know what I'm saying?
Hmm.
And what I found is you have a lot of people that say, "Oh, you got to put skin in the game to make it real." Nah, you just got to act like it's real because putting skin in the game ain't doing nothing but skinning you up for no reason. You know what I'm saying? Um, Hold on, let me finish my thought here. Uh, I can't walk and chew gum at the same time. Okay, yeah. So like, and what I had to do, right? What I had to do is I had to make myself sit down and just sim trade for real. Like act like it's a real account, act like it's my
Hmm.
real money. You know what I'm saying? Because I would just like sim trade and just YOLO, just do anything without any kind of strategy. Just to say
Right.
I'm pushing buttons because
Hmm.
it ain't no fear of losing money. But I had to sit down and make myself stick to one strategy while I'm sim trading so I can get verified information on um how not accurate but how what's the strike rate for this strategy. You know what I'm saying?
Hmm.
How proficient, that's what I'm looking for. How proficient is this strategy? Does this strategy fit my trader identity? You know what I'm saying? And I went through that with several strategies, And then that's how I figured out I personally can't stick to one strategy. I got to have multiple ways to get in because it's like my unverified ADHD be driving me crazy. I say unverified because I ain't never went to see no doctor about it, but I know I got a touch of something. You know what I'm
Right,
saying? And
right,
it like
right.
I can't sit down and just wait on one strategy. I got to have multiple ways to engage. That's just me as a person, as a trader. I know that about me. So that's why I had to do multiple strategies. So what I did, I started sim trading one strategy. And once I got comfortable with that, you know what I'm saying, I started trading it, right? And then when I got over that fear of pushing the button with that strategy, I was trading that strategy, but back testing another strategy to see how it worked and sim trading another strategy while I was like, if I saw my other strategy I wanted to try, but I haven't sim tested enough, I'll sim trade that. And if I see my one that I've been pushing the button with, I'll trade that for real. You see what I'm saying? And then
Mm-hmm.
once I got different models up under my belt that I was comfortable trading with, that's when I, you know what I'm saying, start. I even like right now to this day, if I see something I want to try, you know what I'm saying, I'll try it in sim and I'll just start repeating it in sim just to see, you know what I'm saying, how proficient it is. But
Mm-hmm.
ain't nothing gonna get you over that fear of pushing that button except pushing the button. You know what I'm saying?
Yeah,
And
I think I got that same symptom too, because sometimes, I want to, might trade off the fair value gap or the order block or swing high, swing low. And it's just trying to come down to that one strategy of where I'm comfortable with. Because once them candles get to printing
yeah,
a certain direction, you want to get in that trade. Yeah,
yeah,
have that issue sometimes.
yeah. And another thing is when you do like do your back testing, like
Hmm.
checking out when the strategy like looking at, okay, did it form during this time. Matter of fact, let me oh, I'm already sharing my screen with you. um what's happening, y'all welcome to the Tim and Calio show. uh um if you oh, I hit the wrong thing. All right, so let's just say like this some stuff I was testing. Remember this morning we was talking about, I had been testing out the thing that Michael was talking about this afternoon. Well, it's morning and this afternoon, right? I was in here um looking at it for the morning session too. You know what I'm saying? Looking at it and compare it to the morning session, right? So I'm always trying to whenever he say something, I'm going back and I'm testing it on everything. You know what I'm saying? That's how I started doing with them first. When he was talking about that, he was talking about that first fair value gap, and I started looking at the first fair value gap for everything. You know what I'm saying? All right, let's just say you all right, this 5 minute chart, it don't matter, right? Let's just say you looking at this right here. What date is this? It's the 7th. That's that's this week. Let's go back some more. All right, I don't want to be inside this little short week here. All right, so let's go back. Let's get us what's this? It's that December. That's the 20th. We got all these holidays, man. I ain't got no good week to get to. We got all these holidays. You know what I'm saying? Let's go. God dog it. Let me NQ Tim. And then let's go to it wasn't no holiday this week, I don't think. All right. Okay. So we're looking at, so that's the 8th, Monday, Tuesday, Wednesday, Thursday. Okay, right here. All right. just cutting off that week. All right, so I was just getting that week in. I'll try and just get that week. So let me highlight this, and then I'm gonna, I got to get my thoughts together before I can start talking. All right, so Monday. All right, okay, so this that week there. All right, now I'm gonna go back down to a 5 minute. What chart you trade and look at? What's time frame you trade and look at?
You talking to me,
Yeah.
Tim?
Uh huh.
NQ,
Yep.
um, the hour 15. I mean the hour and the 5.
Hour and 5. Okay. All right.
Yeah.
So I got the 5 minute. I got a 5 minute chart here. So that's good. All right. So
First stage.
right. We let's say like when you're going back uh like this. Let's say when you're going back through price and you vetting your strategy, if you will, right? So looking at this week, this is what I, what I'm saying, this is how I started going back through and back testing everything. Because what I used to do, when I first started doing it, back testing, and people used to say go back and like trade. I used to try to go back in Ninja Trader and try to let the counters play and try to enter trades and stuff like that. That sucks because for me, because I can see what already happened. So when I see the setup setting up, I had no fear of taking a trade, right? So that didn't help me at all. So what I started doing, I started to go back, right, and find a week, right, and now I see this week here, and I would put it on my entry time frame, right, and I'm putting it on the 5 minute because you say you go from the hour to the 5 minute. So we got the day, the hour, the 5 minute. Them the time frames that I would use for that. You know what I'm saying? My day for my narrative, the hour for the structure, the 5 minute for the entry, right? So I highlight the week, and then I'll just look at the week, boom, to see what happened. All right, I said, okay, in looking at this right here, boom, I automatically know, okay, we had a power of 3 week, right? Because we opened, we went down, went up, retraced, and then we end up going up. We ended up, right? So we had a classic power of 3, right? Because we opened, went below the open, came back above the open, came back to the open, and then went up and closed off of the high, right? Classic power 3 week, right? And so then I go in, I say, okay, we had a power 3 week, and then I break it down into the days and see how did it trade throughout that week, right? So let me see something. Can I do something here? 1, 2, 3, 4. It's gonna give me 4 days. Can't do it with that, so I'll just do it like this right here. All right, so let's go to, this is Sunday. Let's go to Monday at 6. Monday at 6 p.m. Come on, Tim. Get in the right spot. Monday at 6. Right. Tuesday at 6. Oh my God. God dog, it's gonna drive me crazy. Okay. And then, all right, so we got Monday, Tuesday, Wednesday, Thursday, Friday, right? And so now that I look at the week as a whole, right? We got a classic power 3 week, right? And then I look at what we did day by day, right? Looking at what we did day by day, I see that Monday we started the accumulation and started the manipulation, right? And then I see we had a Tuesday low of week, right? Based off of, the futures trading times, right? We had a Tuesday low of week, right? And then going into Wednesday, right? We retrace back, right? Um, Near or if not at the open, and I see that the open was right around equilibrium, right? Because looking at over here, we're gonna check that in a minute, but look like we opened pretty much what ended up being equilibrium of the range, right? Traded back to the open, and then got some good displacement, and then the rest of the week was pretty blah, if you will, right? Pretty blah, if you will. And so I see that Wednesday was the best trade and opportunity for this week. This is all kind of stuff that I would annotate, like collecting data, right? That way you can go back and look at, like, if you do it like in spreadsheets, like, you know what I'm saying, if you do it like in spreadsheets, then you can like you can use like Microsoft give you ways to be able to extract the data to find out what's going on with it, right? I don't really use databases like Access. I use spreadsheets. But if you make notes of stuff being like, you know what I'm saying, how many good trading opportunities was it, right? So Tuesday was a good trading opportunity.
Okay.
Wednesday was a good trading opportunity, right? Wednesday looks like it may have been like the best trading opportunity, but Tuesday looked like it might have offered something too, because just looking at it, like looking at like the New York time frame, right? I'm looking at the New York time frame when I'm looking at it, right? So this should be roughly the New York time frame. This should be roughly the New York time frame, right? And then these 2 days here during the New York time frame, since it was a power of 3 day to the upside, that's why I say they was pretty blah. You know what I'm saying? They was pretty blah, but we'll look at to it in more detail. It may not be blah, but just at a quick glance with a chart all squanched up, that's what it's looking like, right? Okay, boom. So now I got my overview of what the week was like, right? Tuesday and Wednesday gave like the best possible setups just from an overview. Now I go in and start looking at, right, how I could have traded if I had a setup this day and if I had a setup that day. That's the first thing I start with, right? Oh my God. I ain't gonna look at the chat. I ain't looking at the chat, right? If I had a setup this day, if I had a setup that day, that's where I started, right? And if I had a setup, then I document everything about this setup, right? And if I took it and how it worked out well, but I go into it with the idea of I knew what was going on. I was on the right side of the move. I knew all of this was going to play out even back here, and I was looking at it the right way, right? And then I'll go through to the other days that didn't look so good and see if anything happened to setup. And if it did, good or bad, like if I saw my setup and it worked, right, and I saw my setup and it didn't work, then I'll document, you know what I'm saying, what happened in those days, okay? And so what that looks like, right, what that looks like is I'll come here, right, and that's our open there. I'll tell you, looking at that, that looked like it was right, so that's our weekly open right there, right? I'll just do it like this right here. That's our weekly open there. All right. That's our weekly open there. And okay. And then let's go here real quick. What's Okay. All right. All week high. Weekly box top. All right. Yeah, weekly box bottom. That's our all week low. Okay. So our all week high, our all week low, and then this is Monday right there. So box top day, box top bottom. All right, box bottom. Right for the day. Okay. Then we go to a 60-minute time frame. Oh, let me go back to the day real quick. All right. So come here, chop off. That's Tuesday, Monday. Go. Nah, let's go to 60. I chopped off the rest of the week and just looking at um Monday. All right. So that's that's our Friday low, Friday low. All right. Friday there. Okay. And then this is our open right there on the 60-minute. That's our open there on the 60-minute. Let's go to the day real quick, and then we'll put right our new week. That's our new week opening gap right there, bullish. New week opening gap. All right. Okay, we'll go back down to the 60-minute time frame. Okay.
Hey, J Rock, I
So,
need you to mute.
oh yeah,
Oh, huh?
somebody mute. I heard something. I know I was hearing something. All right. Thank you. Okay, so on the six now we're on the 60-minute, right? And this is remember this is Monday's trading right here, right? This is Monday's trading here, right? This is Monday's trading, and right, this is everything that happened on Monday. Okay, and so now, right, we got our prior day high, prior day low marked out, right? And then we are bullish for the week, so we're anticipating. So you go in, you know what I'm saying, documenting this day, right? Go in documenting I had a bullish bias for the week of um 7 October. I had a bullish bias for the week of 7 October. So coming into Monday, I anticipated lower prices. Anticipated lower prices. Yada yada. You however you want to word it. Um, so price during the Asian session opened up and engaged the buy side. Engaged the buy side, the prior day high. Right. Engaged the buy side to the prior day high. Which was in line with my thesis because if I'm bearish, I want to see it engage, attack, buy side first, then price displace downward, give yada 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 whatever, you know what I'm saying. What do you want to do? Then retrace back up into a hourly the wick of an hourly bearish order block. Go through however you want to mark it out on the hourly chart, right? Everything you want to mark it out on the hourly chart. Talk about how price played out, right? Got your order block. However you want to mark it out, how price played out. You go through, talk about whatever it did, yada yada yada, right? Um, I don't have an out, but that's cool. Okay, and then you can look at the right. Say you had a bullish fair value gap in the premium of the move that you anticipated to become an inversion fair value gap and used as resistance, right? Right there, you can annotate all that. Had a the 3 p.m. Bissy, anticipated 3 p.m. Bissy to be used to become an inversion fair value gap and be used as resistance, um, because not only because I was bullish, but it was a bullish PD array made in the discount of the price leg. I mean, in the premium of the price leg. Right. We look at the price leg. It was a bullish PD array created in the premium of the price leg, which led me to want to see that become an inversion fair value gap and then used as resistance because I'm bullish on the week, so I'm anticipating lower prices early in the week, like Monday and possibly Tuesday. You know what I'm saying? Yada yada yada. However you want to, you know what I'm saying, break it down and document it throughout the hourly time frame, right? And then you mark up everything on the hourly time frame that you see price had interacted with, right? Everything you see price interacted with, you mark it out on your hourly time frame. Anything that catches your eye, anything that you you know use as far as inside your strategy. You ain't got to go through and mark up every single thing, but whatever you use per your strategy, right? You mark it out as if you knew that was and with this right here, with stuff like this right here, as far as like these lows right here, like if you look here, I got this right here marked, and you can decide to do it however you want to do it. But like, let's say looking here at these lows, right? Got this low right here, this low right here, and this low right here, right? You can you can mark it however you want, right? But like for me, with this being the daily low right there, and this low right here being like the start of this whole run away from this area right there, right? I personally would mark that as like an external low, and then I will mark this as an internal low. Okay, I'll mark that as a internal low, and then right, I'll mark it as an internal low. But then you see, and so I ain't got to put like a whole bunch of stuff on my chart, right? I just put this right here as a relative equal low, even though they ain't like, even though these right here ain't uber close, right? I just put it as a relative equal low because both of these here are internal liquidity for this little range right there, right? And if I was getting short off of this, right, this would be my low hanging fruit, that would be my low hanging fruit, and that will be my terminus, right? So you can mark it out however you want to mark it out, but for me, that's just how I'll mark it. But for completeness sake, I'll just come here and I'll mark both of them, right? And then I'll just put them as internal sell side, right? Instead of relative equal lows, right? Just for completeness sake, because, well, for clarity's sake, because that's how my mind works. I'm just trying to make it as simple as possible. Now, boom, right? You go in and then you document. You take notes on the hourly time frame as if you saw it playing out. Everything that played out, you expected that to happen, right? You expect that to happen, and then now you go into your 5 minute time frame, and then you look at your trading window, right? What you trade, the New York session, What you trade? The New York session, London session. What you trade?
New York.
New York session. The morning, the afternoon, or all day. What you trade?
Whenever it's presented me an opportunity.
Okay, I'll take
So
that
all
as
day.
I'll take that as Overtrade McGee. We gonna call him Overtrade McGee. All right, so we gonna put 9:30 to 12, and then we gonna put 1:30 to 4. All right, Overtrade McGee. All right, so let's turn this on. All right, boom. So now we're looking at your trading window. Let me that green I got back there is mad green. So let's turn that down a little bit. Man, it's already turned down. What is that? What is that? So super. Oh, it might be the blue. It might be the blue. Hold on. Yeah, well, okay. All right. So now that we done documented the hourly with the whole day, what we expect that price to do, now we're looking at your trading times and seeing if anything was presented as far as giving you an opportunity to trade, right? And before we do that, let me come here. And this fair value gap right there was created at the close of this candle. So I'll put a line there so I know when that fair value gap was created when we go to the lower time frame. All right. And then this order block right here is from way over there, so that's way before this time frame. So that order block is fair game. Okay, now on the 5-minute time frame. All right, so now that you're on the 5-minute time frame, you already documented the hour for the entire day, looking at how price moved throughout the entire day. And mind you, you'll be annotating like times when this happened, right? You'll be annotating times when everything happened from intersecting with the PD arrays. Now, we're coming in here and we see this is 9:30 and this is 12, okay? And then this is 1:30 and it go over to 4. All right, so coming in at 9:30, right? And based off of everything we marked from our higher time frame, right? As far as important PD arrays, right? For this day, we already marked it out on higher time frames as far as important PD arrays, because we see what price did and we doing it is in the fact that we knew these were the key points that price was going to react off of, right? So all we got is marked is this inversion fair value gap we was looking to take a trade off of, and this order block that we was looking to take a trade off of, and then later this bearish fair value gap that we was looking to take a trade off of, right? Those are the only important PD arrays that we marked out, that and whatever you marked out. So now looking at your trading time, your trading window now is 9:30. Whatever rules you got as far as times you trade, if you got any, then you would be looking at your trading windows. And right now we're just looking at the whole morning session, the whole afternoon session. Okay. So for the whole morning session, right, since we was bearish on the day because we bullish on the week, right, you'll go in there and see if anything's set up for shorting opportunities for you based off of how you trade, right? You got price coming back. You look for opportunity to get short off of this inversion fair value gap and this order block right there, right? So looking at price and based off how you trade, right? If you trade from right the target to the liquidity, okay, now this is showing right here for just me looking at it personally, right? It's showing you coming back into your higher time frame PD array, right? If you take your entries as soon as it trade up into whatever your PD array is, this inversion fair value gap, this order block, right? You got an entry, right? But then you got to point out if you take it back to the liquidity, like here or to the liquidity there that we marked out, right? Now you're in, you know what I'm saying, whatever you marked out is the way you would trade. So if this is a target, this is a target, and this is your terminus target, right? Then you need to go in and annotate, right, what your entry was based off of on your entry time frame, right? And then you need to annotate how much time it took for the trade to play out, right? And go into, you know what I'm saying, your favor. How much time did it take to play out? Because you want to understand, you know what I'm saying, how long it takes trades to play out sometime, right? Every trade ain't just gonna be quick. And then you can look at it and say, for me personally, right, looking at this right here, I wouldn't have been trading this morning session, right? And that's just for me personally, right? And it's because this right here is high resistance. What's the indication of high resistance, right? A bunch of overlapping candles and deep retracements, and that's what we got going on here, right? So with me, I would be defaulting to looking over here for some type of trading opportunity, because this is high resistance, and typically if we get good moves during this session, right, high resistance during this session, then a lot of times the next session will give us a better opportunity, right, based off of, you know, our knowledge of the price. So if I see the morning acting ugly, right, then I would annotate that because the price action wasn't favorable in the morning, I elected to trade in afternoon. Then I'll look over here, right, for setups based off of price respected my higher time frames PD arrays that I want to trade off of, but because it was high resistance and didn't present me any opportunities, then I ended up, you know what I'm saying, taking a short off of a fair value gap in the afternoon, right? In the afternoon, because the morning wasn't favorable. I took a short off a 5-minute bearish fair value gap in the afternoon because the morning price wasn't favorable. I, you know, annotated any kind of way you will, but you look at price, study price, and see that in the morning, right, price came down, right, taking out the sell side, moved up, taking out the buy side at our higher time frame anticipatory reactionary points, right, price went into a consolidation pattern, right, and coming into the lunchtime, the afternoon session at 1:30, right, we got a Judas swing at 1:30 here, price went up, right, and then displaced down, right, giving us a Judas swing. And once I saw the Judas swing, I entered short on the 5-minute, the 2 o'clock 5-minute fair value gap, right, during the macro time, right, entered in on the 2 o'clock fair value gap during the macro time, and then took the trade down, whatever, right, and you annotate it, and that's how I started going back and mapping everything out, looking for my set. And the reason why I was pointing this out, because this right here was my setup when I first started, right? I called it the liquidity run reversal, right? We come to an area of liquidity, right? See how we traded up above that high right there, right? And then we just start, you know what I'm saying, going back and forth, back and forth, back and forth, right? And whenever I'm inside my trading window and I get a move like this, displacement, and I got one full candle, right, that takes out the low and gives me that fair value gap, like the fair value gap has to be in that one full candle. So how we got this Judas swing there, right? So now we got a Judas swing, we got a bearish order block there, we got the SIBI there, right? That was my exact setup. So I know that I dropped off there. That's why my eye gravitated straight to that, because I done seen it so many times in back testing. That was my initial setup. You can go back and look at my old videos, talk about the liquidity run reversal. That was it there. And I would go in and annotate it and document it like that, right? And then I would find this setup as many ways I can, coming out of consolidation, in regular price move and like moving price. And I try to find it in every situation it can, and then I go through and I look at um all the little nuances and details surrounding this trading day as to what made it work and what made it fail, so I can start build an idea of when I can trust this setup, right? What was happening in price prior to, what was happening in price, you know what I'm saying? What was it news that week? Was it news that day? All kind of stuff like that. And then once I start getting comfortable with understanding how it sets up, then I started going into sim trading it, but only looking for that one setup, like whatever the criteria is for the setup, right? My criteria was we need to take out opposing liquidity, right? At preferably at some higher time frame PD array, right? So over here we took out opposing liquidity at a higher time frame PD array, right? And then during a price window that I trade, I want to see price. I want to see price give me some type of manipulation move, right? Go up, then blast down like that, right? Manipulation move was there, right? Retrace back into that fair value gap right there. And at first I wanted this, I wanted to be one full candle that gave my fair value gap. If it had like two fair value gaps there, it wasn't my setup, right? I just needed that one fair value gap there, and I eventually started to adapt it a little bit and tweak it a little bit, and then I started looking for like here how we got a mitigation block here, right? We got that mitigation block there. I further adapted it to where I wanted this to take out that high and it be a breaker there instead of a mitigation block. It'd be a breaker and a fair value gap right there, right? I slowly started to adapt it over time and narrow it down, well, added more rules, and then I started pushing the button on just that, right? And I was, I went through weeks and weeks and days of going back looking at price like that, and then I did weeks and weeks and days of actually sim trading it, you know what I'm saying? Sim trading it like that. Then once I got comfortable with pushing the button on this model here, then I started back testing other models, you know what I'm saying? Because I started noticing it wasn't coming back to my fair value gap, right? And what was making it stop coming back to my fair value gap, right? Sometimes it was coming to I figured out that's why y'all hear me say I don't like when the fair value gap be up above the breaker like that, because I found out it was coming back to a breaker or coming back to an order block or coming back to something and never making it up to my fair value gap. And that's when I figured out, and y'all hear me say that right to this day, I don't like when the fair value gap be up inside the breaker or the mitigation block. I like for the fair value gap to be right at the breaker or mitigation block like that, right? So yeah, I know that was super long-winded and you ain't asked for all that, but hopefully it helped.
Appreciate that, Tim.
Yeah, ain't nothing. What's up to the rest of y'all, man? Y'all welcome to the Tim and Callio show, man. 45 minutes later, 45, 47. Hey, man, if this your first time tuning in to Tim's Tidbits, welcome, man. Welcome. We like to get together and look at price action. You feel me? I typically trade the NQ futures. I typically trade the NQ futures, and today we are going to look at what price did throughout the week for the NQ. Let's go to our new week opening gap for this week. And there she blows. Hold on 15 minutes so we can see a little bit more time there. All right, that's our new week opening gap to start our week off this week. And then we'll look at the days, right? The 7th, 8th, 9th, and 10th. Those are all our new day opening gaps. Some of them are small, you can't see it. Right? So we got the new week opening gap there. And then we got the new day opening gap from the 10th there, the 9th there, the 8th there. And where's Mr. 7th? The 7th, way up here. Here's the 7th, way up there. The new day opening gap from the 7th. So, and then let's go back here. This is our last week's high and last week's low. Right. That's the monthly high. Last month's high up there. We didn't reach that. No need to put that on there. And this is the monthly low. Right? Last month's low. We'll put that on there. Okay. Had a daily fair value gap that we was watching on the higher time frame. No need to put the midnight price on there because that changes every day. Yeah. Okay. So, and oh yeah, and it was a short-ish week because Thursday the market was closed for the New York session. Globex was open, meaning we traded. What up, cuz? Meaning we traded from 6 p.m. and then it closed. The New York session was closed, so it closed at 9:30, right, the next morning. So it opened up 6 p.m. Wednesday night, and then it closed at 9:30 Thursday morning. Then it opened back up for Globex again at 6 p.m. Thursday night, and then traded until 5 p.m. today. All right, so it was a weird week, and looking at what price this is what we started at over here. All right, just looking at it in the overall view. This is the beginning of the week there. In case you don't know, that purple line is our new week opening gap, and the new week, what the new week opening gap for anybody who does not know is the close, the 5 p.m. close on Friday, and the 6 p.m. open on Sunday. Because we know the futures trade 23 hours a day, and it opens at 6 p.m. and trades until 5 p.m. the next day. That's the futures trading day. Now, those that trade the ICT concepts like myself, we know that you not only have a opening for the day, but you got a daily opening for the algorithm, which you may hear people call it the true day open, because the algorithm works on Eastern Standard Time, and a day for Eastern Standard Time goes from midnight until 11:59 p.m. right? So that's a day for the algorithm. So it gets a little confusing sometimes. So when you're watching price, just understand that when price starts here at 6 p.m. and then until you get over here, right? That's 12, right? That's 12 a.m. there. This is the start of the day for the algorithm, right? And then when you come over here, right there, that's the end of the day for the algorithm. All right. So this is, let me make this right here, this color here. And this, if you don't trade ICT concepts, just ignore everything I'm saying. Algorithm, A aqua, that's an ugly color. IPTA, indigo. All right, we're gonna make the algorithm name is IPTA, so we're gonna make it indigo. All right, gonna make it an indigo color. Okay. All right, so we're gonna copy this over here like this. Come over there, put that at 12 o'clock. Oh, did I go too far? Monday. Yeah, I did. I went too far. Well, y'all tell me I went like 2 days. All right. Okay. All right. Now, in between those lines are the algorithms day, right? And come here. Inside that box there, that's a trading day for futures, right? This is a futures trading day right here inside that box, right? From 6 over here to 5, right? That's a futures trading day, all right? In between these lines right here, right? This is Monday's trading for the algorithm, right? That's Monday's trading because that's a day, right? For futures, this is Monday's trading, right? Starts Sunday evening, goes to Monday at 5 p.m., right? So those are the two different day openings that you got to be aware of whenever you're trading ICT concepts. If you don't trade ICT concepts, ignore everything that I just said. Okay? So we come over here, right? And we click there. That right there is our weekly open. Right? That's the start of the week. Okay? That's the opening price for the week. We starting out the first trading day of the week. Okay? But I don't have a weekly open. All right. I don't have a weekly open, so I'm just gonna. So that's our weekly open. Right, that's the start of the week. So we'll just let that run through the entire week. Right. The easiest way for me to identify it and not having that big line on there that say weekly open, right? When I look at my new week opening gap, right? If it's a bullish new week opening gap, I know the top of it is the weekly open. If it's a bearish new week opening gap, I know the bottom of it is the weekly open. That's how I quickly identify my weekly open on the chart without putting that big line on there that says weekly open, right? The new week opening gap has double duty for me. Okay. And so looking at how price time and price is the most important thing, right? Time and price, we're gonna focus on kind of like the beginning of the week and then the end of the week, because this up in here, it was just ugly. Why? Because it was non-farm payroll, and we know going into non-farm payroll, right, the market tends to be a little bit messy toward the middle of the week, right? Because got big news coming out. The market doesn't like uncertainty. So if it's big news coming out, the market tends to kind of hover, right? The market tends to hover and just leave it there. Speaking of hover, let's do this right here. Oh my goodness. I can't make this stuff up. I can't make this stuff up. Right? Remember when we said price likes to hang out at fair value? And what was price hanging at for, you know what I'm saying, a good amount of time? It was hanging out right here. And all I did, y'all saw me, I went to the lowest low of the week to the highest high of the week. And look where price was hanging out right there. What happens at equilibrium? Price tends to consolidate. Why does price tend to consolidate at equilibrium? Because that's fair value. That's the in-between price from the highest price in the lowest price of the range that the market is trading in then. So that's a fair value. It's not expensive, it's not cheap, it's not a premium, it's not a discount. It's right at fair value. And look where price hung out right there. Right? So, for those in the gang who know about Timinucci tools, remember the other day, I can't remember who it was, they was like, hey, based off the Timinucci's, it looked like price is heading down to them lows down there. And I said, you're right. I agree with you. But since price has not given us any indication that it wants to continue down there, we have no choice but just sit there, because we can make a bearish argument and we can make a bullish argument. And price isn't giving us any indication of what it wants to do. Right? Now, it's like if you choose to be on the bearish side and it works out, you just happen to be on the right side because the market hasn't shown us that. If you choose to be on the bullish side and it end up bullish, you just happen to be on the right side because the market hasn't shown us that. Right? And now y'all see there, it. So shout out whoever that was talking about they had grabbed the Timinucci's, and based off the Timinucci's, it looked like price was heading to that low. Hey, shout out. You was on the right side of the market. It worked out for you. Hey, this stuff do work, man. So, so now let's look at it like this right here. But y'all see price. The algorithm gonna be the algorithm, even when it's being held in like a certain range, right? Because that's the high of the week, that's the low of the week, and for a vast majority of the week, right, it just hung out right there, right? And now that the week is over, we can look back and see, hey, that was equilibrium. Let me turn on my fancy dancing, right? I don't know what I just did. We can look and see, hey, that was the equilibrium of the range, right? So now this should be a boost of your confidence, especially to whoever that was, using the Timinucci's and was looking. This should be a boost to your confidence that you say, hey, right, based off of what I saw before this happened, when the chart was like this and we had that scary right edge, right, I was anticipating price coming down to these lows here, because based off what the algorithm has done in the past, if price does this, right, if price does this, then it should do that, right? And voila, Bob's your uncle, right? Hey, Wells, J-Rock, mute for me. All right. I know you probably got a phone call or something and knock you off mute. Let me help you out. Sound like you're working, so I'll help you out. All right. Y'all can't hear that no more, right?
Yeah, we good.
All right. Okay, so let's copy these over real quick and do it for Tuesday. Tuesday. All right, so that's Tuesday at 12, Wednesday, Thursday, and then Friday. Okay. Why this one looks so much farther? 12 a.m. Monday at 12 a.m. Tuesday at 12 a.m. Wednesday at 12 a.m. Thursday at 12 a.m. Right. It just look closer over there for some reason. Am I tripping? Anyway. All right. So. Right. Looking at the day. So we come in here. We open up there. This is the weekly open. There. Right. And looking at what we got here. We got again, it's another power of 3 week, right? Because we opened here, right? Opened there with some accumulation, right? We went up, right? Engaged a old buy side, that old weekly high right there, right? We went up, took out the buy side, and then we came down, right? Right. So we had accumulation, manipulation, and distribution. We distributed below a old low, right? We took out an old high, then we came down and distributed below an old low, closed off of the low, right there. So a power of 3 week to the downside. All right. Monday, price opened to finished off this day per the algorithm, right? Starting a new day, and then we came into this 12 o'clock session here this day. Price took off and took out the buy side, right? Then we traded back down, finishing off the futures day here, right? Finished off the futures day there, started a new futures day here, consolidating, right? And then we start a new day for the algorithm, right? Price comes up and takes out buy side again, right? Giving us a Judas swing here on Tuesday, right? So Tuesday morning during the New York session, we go into it like during the New York from like 8:30ish, 8:30ish we get a Judas swing, right? Oh yeah, mind you, we had traded up into the bearish new day opening gap on Monday, right? So then on Tuesday, coming into a new day for the algorithm, right? Right. Coming to a new day for the algorithm, we go up and we take out buy side right at consequent encroachment of the daily SIBI, right? And get a Judas swing to the downside, right? Dropping below the weekly open, right? So we drop below the weekly open. And this is all Tuesday during the New York session, right? Once we get below the weekly open, we trade back up to the weekly price, come just above the weekly price here during the New York morning session, right? If you want to get short, right, where's the ideal place to get short, right? You want to get short in a premium and preferably above a open, right? So right now, you're looking at this range over here, right? Because this is the range, this was the last range that was going up, right? This was last range going up, and up here, we're expensive, right? We're very expensive up here. We're in a premium, right? Now that you've taken out that high there, and we come here, and we're starting to move back down, right? We take out that buy side, and then we displace down here, right? Now when we come back up, right? When we come back up, we're coming back above the opening price, right? And you say, Tim, we're not in a premium of this move right here, right? We're in a discount of that whole move right there. Well, are we? Let's go and look and see. All right. Let's zoom in, right? As we come here. Okay. Now that we're zoomed in, as price came down here, right? When we see this move right here and it ain't giving no signs of trying to retrace, what do we say the algorithm is doing at this time right here? Somebody tell me while I get me a sip of water. You can either unmute and say it or type it in the chat. When price is just going in one direction with no kind of way of retracing, what do we say price is doing right there?
Is that spooling?
Yes, spooling. Spooling. Shout out Lump. Shout out Marco. Shout out Here to Learn and Share. Right? Spooling. Right? So price is spooling. Now, when you see price spooling like that, right, you say, okay, why is price spooling? You want to figure out why price spooling. First off, you want to come and see what time is it, right? It's 9:30, right? 9:30 up until 10:30, right? So 9:30 is not a time when price should start spooling, right? Around 9:50 or so, right? Around 9:50 or so, price will start spooling, right? But around 9:30, there ain't really no time for price to be spooling, right? So from 9:50 to 10:10, we can anticipate price spooling. But then when it keeps doing it like all the way up to 10:30, you say, okay, that's more than just the macro. What's going on, right? Then we look over here and we see that price when we open for the close of this day per the algorithm, but the start of this day here per the futures trading, right? You see that price offered buy side delivery, right? Offered sell side delivery up to this point, right? So let's put a line here, right? So at this point here, this area here has been efficiently delivered. Buy side delivery, sell side delivery, right? And then we hang out in this area for a while, right? So this has been efficiently delivered, and we're offering buy side and sell side, just kind of consolidating, right? When you consolidate that, you're efficiently delivering price, right? And then we leave that area, take off, leave that area, right? And so you see where we got our line at right here, that line there, right? If you draw it over to there, right? And then you notice here, once we left that area, right? Now we know this is a balanced price range. Okay, that's a balanced price range. Price leaving that area, balanced price range. I'm done with that area until I go do something. Okay, now we still have this area here that's lacking sell side delivery. It's only been buy side delivery, only been going up. So we trade all the way down to here, right? That incorporates that piece there. And then this candle here trades both ways there, right? Letting you know, yep, I'm done with it, because we got buy side delivery, we got sell side delivery, right? We trade back up, right? Coming close to these, that little area there, and then it wicked back out, and then it left that area, right? Left that area. Okay, so now you're looking at all of that up, right? All of that, you're looking at all of that as a balanced price range. Why? Because on this candle here, price left that area. Now, if you get your Fibonacci tools and go from the high, right, to the low, right there, right, go from the high to that low right there of the price that left that area, that's your highest point, that's your lowest point from when price left that area. And when you look at the Fibonacci tool, I can't make this stuff up. Y'all look at this right here. I can't make this stuff up. When you look at the Fibonacci tool, right, 50% is right there. And what just so happened to be resting right there, right? Remember what I said, the low of the new week opening gap is when it's a bullish new week opening gap, right? We said the low of a bullish new week opening gap is what? What we said the low is? On a bullish new week opening gap? That's a question. Ain't nobody gonna answer. Nobody know? Hello, is this working? Hello.
I don't know. I missed that. I don't know the answer to
Does it
that.
offer resistance? Like,
No, I'm saying
resistance?
just what's the low? Like, this is a new week opening gap. What's that low represent? It's a bullish new week opening gap, right? Okay, so what is the new week opening gap? How do you find a new week opening gap?
From the close of Sunday to the open of from the close of Friday to the open of Sunday.
Okay, so if it's a bullish new week opening gap, what's the low?
Oh, the low is Friday's close.
Friday's close. Shout out to everybody that's putting in the chat, and shout out Yolanda for pulling up anything. And shout out to everybody that said they had a commercial so they couldn't say nothing just then. Okay. Cause y'all know my stomach had started growling and I just want to get up out of here with y'all if y'all weren't gonna participate. Move, Mike. Alright, so here we go. We got I was saying I can't make this stuff up because when you run the Fibonacci tool, remember I told you, if you know where to anchor the tools, you can use them to help you, right? And it's going to be algorithmic. The precision is going to scare you, right? And y'all see, I'm just sitting here talking and I'm going through, I had these charts squanched up, you couldn't see nothing. And we went in and started dissecting this little piece of price right here. And I said, this is the area that left the balanced price range. The highest high and the lowest low from that area, right? Now, if I run a Fibonacci tool here, right? And just so that nobody can say that Timmy Rogers is making this up, right? If I make that number big there, right? I come here. Can somebody tell me what the equilibrium of that price leg is? What price is the equilibrium of that price leg on that Fibonacci tool right there? What does that say over there? Can y'all see that?
It's Friday's close.
I'm saying, but what does that say right there? What's that price say?
Oh, 21,493.
21,493. That's the equilibrium of that range right there, right? What does Friday's close say? That blue number on the bottom of that box right there. Can you see that? Make it big. Can y'all see that? I can't make this stuff up. Open, high, low, close. Remember I told you the most important things is the open, high, low, close. It's not an accident, right? It is not an accident that the algorithm left a balanced price range, right? Traded up, made a high at 21,586 and a quarter, traded down, right? Made a low of 21,399.50, right? And it just so happened that the equilibrium of that price range happened to be the exact price of Friday's close. Happened to be the exact price of Friday's close. That's not an accident, right? And then when we went back above the opening price, right? We went back above the opening price. What I say, when you want to sell, you want to sell in a premium, right? Where's that opening price of this dealing range? We started this because we were saying, hey, that opening price is not in the premium of that price leg. And I said, let's go investigate it and see. Where's that opening price? It's in a premium, right? Equilibrium, above equilibrium. It's in a premium. So smart money is selling up here, right? It's selling up here above the open, right? We displace away, taking out the low, showing bearish intent, right? And then it trades back up. Look at the precision of these bodies at that equilibrium and that old close. Open, high, low, close. Price trades up, stops, boop, right there, right? And the body respects that old close, right? Respects it. The next candle opens up. The body is respecting that old close, right? Because it's up under the bottom. Trade up to consequent encroachment of the new week opening gap. Respect consequent encroachment of the new week opening gap, right? And then price quickly trades down, creating an inversion fair value gap right there. Trades back up into the inversion fair value gap. Mind you, when it came up and respect consequent encroachment, it never took the high from when smart money got short above the open. Traded back up into the bearish fair value gap, respecting consequent encroachment. Never took the high, right? High is safe, right? And then price broke down, right? Giving up the ghost, and this is the end of the day there. And then closed off of the low, right? Went down, closed off of the low there. All right. Dropped down and got its eagle on, girl. Okay. Do it make sense? Do it make sense to y'all? I feel like I've been talking a long time, and I gotta go. That's why I had to reschedule the lecture for anybody that's in the boot camp. I put it in Discord. The lecture has been moved to Sunday night at 8. If you are a mentee, we got Sunday night Q&A at 7. The boot camp personnel, you have access to that Q&A also at 7. Right, so we got Q&A at 7 Sunday night for the mentees. Second Sunday Q&A, and then we're going to do the order flow lecture Sunday night. We're not going to do it tonight. Do anybody got any questions before I get out of here? Got about 10 minutes. Do anybody got any questions?
If you the spot that we just talked about, that it came back to that new week opening gap and above, like you said, equilibrium of that area. Do you ever look left and use like what was a former order block?
Yes.
Would that be considered like because it was bullish, we sliced through it? Do you ever use that then as, so to speak, not support but resistance? Is that the wrong way to?
Whatever
Huh?
Pedia rated I'm watching, and I'm anticipating it to be support or resistance, you always look to the left. You always look to the left, no matter what Pedia rate is there that you're picking to act as resistance. You always look to the left to look for your support or your resistance based off of, you know what I'm saying, the algorithmic signatures.
Okay, so we can use that as additional confluence and stuff. Okay,
Yes. Yes, you're always looking over there. You know, when we look back to see if it's a breaker over there, we look back to see if it's an inversion fair value gap. We look back to see whatever it is over here, because we're anticipating these PD arrays over here to either be support or resistance, depending on if you're bullish or bearish. And then the stuff that's in the near term, that's what we're trying to use as our entry, right? We're looking here for our entry, and we're looking over there for our support or resistance confluence. Right? Because if you look, if you think about it, right, we're in a market maker sell model there. So when you're on the sell side of the curve, you're looking back to the buy side of the curve for reclaimed order blocks, for, you know what I'm saying, stuff like that. Because when you're going up, remember, we ain't talk about that yet, but anybody that remember us talking about it before, we ain't talk about that in the boot camp yet. But as you're going up, right, when you make, you make or bearish order blocks over here on this side, I know we're going up. But when you make a bearish order block on this side over here, when you get to the other side, you're looking to reclaim that bearish order block and sell off of, right? You're actually like, because the algorithm is hedging, right? The algorithm is hedging. So as it's going up, it's selling, right? That's what's creating them little dips in price like that, right? As it's going up, it's hedging into short positions, because the way it works is they want to go short when they're here. So they engineer liquidity, manipulate it up to a different place, and then come back and attack that liquidity that they engineered. So as it's going up, they're scaling into short positions, right? And when you get on the other side of the curve, you come over here and you reclaim, right? You come back over here, right? And then you reclaim bearish order blocks, right? Reclaim bearish order blocks, reclaim bearish order blocks as you're going back down, and you're, you know what I'm saying, you're adding to the short positions, right? And you're not only adding to short positions, right? You're getting out of any long positions that you're still in, you know what I'm saying, mitigating any loss of any on a long position that's still in from that side of the curve that you didn't offset everything up there. But as it's coming down, you're reclaiming bearish fair value gaps. And the same thing in a market maker buy model. When you get to the other side of the buy model, right, you come back and you're reclaiming bullish fair value gaps, reclaiming bullish fair value gaps, reclaiming bullish fair value gaps on the other side of the model, right? So you always look to the left for your support and resistance. What's up, gang? I hate I never get to catch a lie anymore. Why you want to catch a lie? Who lying? Ain't nobody lying over here. Shout out E-Rock, man. E-Rock, you gotta turn your notifications on, man. You supposed to turn your I even sent out the bat signal in the Discord, and you still missed it. That's your fault. Anybody got anything else? Got about 5 minutes. Anything else, peoples? All right. If nothing else, I appreciate y'all for hanging out with me. Ajala Pies, I ain't get a chance to do my intro. Look at Rhonda missing it. Oh my goodness. Rhonda missing it. Y'all, it's gotta be the throwback gang with the purple squares that's missing everything. Speaking of purple squares, let me go ahead and shout out people with purple squares. Let me shout out the people with the purple squares. If y'all don't want to hear me shout out the people with the purple squares, get gone. I want to shout out the people with the purple squares. I want to shout out the people with the purple squares. Memberships. See your members. Memberships. Memberships. See your members. Total time as member. All right. We're going from the top down this time. And look who's sitting at the top. Shout out Rhonda Green. 2 years in the gang. 2 years in, look at that, 2 years in the gang, and 2 years as a black spider. So she been black spider for the whole time. Shout out Rhonda Green. Shout out Seawalk, 2 years in the gang. Shout out Seawalk, right? Shout out Free to Be Me. Shout out Sanjay Lee. Michelle Tucker. Shout out Michelle Tucker. Shout out Calio Mendez. We got Laverne. We got, y'all know who that is. Y'all know who that is right there. We got the bane to my existence. Shout out my dog Robinson. 2 years. We got Casey, Jennifer Brown. Shout out Jennifer Brown. Will. Question mark. We already said these. Question mark. Kareem. Cal Coolett. Here to learn and share. And Lil Hulk. 2 years strong, man. 2 years strong in the gang. We got a few people that's getting close. We got some 23 months, a couple 22 months, and some 21 months. We got some people that's getting close. All right, we got some 23 months. That's real close, real close. All right, I appreciate y'all, man. I appreciate y'all. I really do. I really do. All right, I do this because I love doing it, and y'all make it a joy. The gang is a nice community, man. It's a very good community. It ain't toxic. We don't deal with all that foolishness. And it's a good time, man. It's a good time. I appreciate y'all again, man. Y'all enjoy y'all evening. Y'all enjoy y'all weekend. Again, mentees and boot camp. Q&A at 7. Boot camp people. I will be purple soon. Okay, Lulu said I'm going to be purple soon. You going to be purple soon? I feel you. I'll be purple soon. 7 p.m. Second Sunday Q&A. On Sunday, 8 p.m. boot camp lecture on order flow for the boot camp. Y'all enjoy your weekend. Y'all enjoy your families. Thanks for tapping in. Hopefully this helped. I'll be like all over the place sometime, but hopefully this helped. Hopefully y'all got something out of it. If you did, tell a friend to come over here and tap in. Share it with somebody. You know what I'm saying? Tell her, hey, come over here and get this good game. All right. Till the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. My name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just Big Spot if you don't hablo español. Y'all be safe out here in these trades.